Our final topic is about the financial markets in Europe and also financial regulation in Europe, especially how they impact on Malta. I'd just like to talk about the financial markets in Europe. What do you think will be the biggest changes over the next year or so in Europe, both in terms of challenges and opportunities?
That we're going to see more rationalization and more deepening of these markets, it's very true. There is still the question of what will be the approach by companies to these markets. There is also this theory it's too big to fail, but at the same time, would it be more advantageous to have smaller companies or, rather than big companies? So I think that's a little bit unclear. The market essentially, for a time, will remain, what you might call bouncy up and down.
That's quite a lot of change. How do you think Malta's going to cope and maintain its competitive edge?
Well, they will affect every European country. How exactly, obviously, we still don't know. Whether we're just simply increasing the regulatory burden without being properly functional, that is still unclear. What is very clear is that there is going to be better control of cross-border activities. In the end, we're part of the single market, and I'm a firm believer in cross-border activities, provision of services from one country to the other, particularly financial services. But at the same time, I think we need the approach, although seen on paper legislatively, the practical approach is still unclear and needs to be determined.
And what about regulatory change? There's quite a lot happening globally, starting with the G20, moving through to the Financial Stability Board, the Basel Committee, and there's a lot happening at the European level. Now, financial institutions accept that there's got to be all of this regulatory change, but they also think that there's going to be too much. What would you say about that? Do you think there's a danger of a knee-jerk reaction?
No, I agree and disagree. In effect, I think the first thing we need to do, which will come from the G20, Financial Stability Board and these authorities, we need to have a level playing field. How we regulate companies and how we regulate the markets. Now, whether that regulation is going to be, as I said, increasing liquidity rather than controlling the products that banks put on the markets, I think that's debatable. We seem to be going more of the old style and increasing more of that. I'm a firm believer that we should look more at products, particularly if I take a view, there's no point in looking at a bank as a whole and see its tier 1 capital, etc. And then suddenly this bank is selling these structured products and which belong to another institution, through securitization. Suddenly somewhere one collapses, particularly those based on property, and then there is a ripple effect, and there's increasing the liquidity then is complete nonsense because the whole thing will still collapse. So I think we must put regulation more into proper perspective. Now, you might say the market in the past was very dynamic, very open, etc. I don't think that with the regulation that's coming in, it will change the dynamism of the market. The market are there. It depends on the operators. The operators are innovative. What is important is that innovation must not outstrip regulation, because this is what happened, and it's important that the regulator is completely abreast of the innovation.
And what about all this regulatory change? With tougher regulation throughout the world and in Europe, how is Malta going to maintain its regulatory model, this firm yet flexible approach, which is based on principles-based regulation rather than rules-based? Is there a danger that you're going to have to backtrack a little and become more rules-based?
No, I don't think so. There is always, and that's why I said if the regulator essentially, where I said regulation must be ahead of innovation. So if the regulator is innovative, he will find a way of handling these issues. So he must understand the innovation and take an innovative approach to that innovation and to the regulation that's coming in. Now, when I use flexibility, it didn't mean that bending or stretching the current regulations. That doesn't happen. What I was saying, I mean, essentially is that the flexibility is by introducing certain other aspects of regulations that make it easier for the operators to operate, but the baseline remains the same. As I said, for example, captive companies and insurance companies, general insurers, to take an example, are regulated in the same manner. However, an operator here suddenly realized that he could have this so-called extended captive without costing him more money. There is no change in regulation, but it showed that the flexibility that he could have a general insurer managed by a regulated manager. So this created more opportunities for him. He could do more business, but within the same framework of regulation.
Professor Bannister, thank you very much for joining us today.